Hi everyone and welcome to another video from Money with Dan. I can't wait until after 30 June 2021 so I can lodge my tax return and get my long awaited refund from working from home. Why am I expecting a larger than usual refund this year? Well, it has been a year like no other, and likewise the 2021 tax return will be the tax return like no other too. In this video, I'm going to share why I think most Australians should be planning to get their tax return lodged as soon as possible, just like me, as I suspect a lot more people will receive more of their tax dollars back this year after so many unusual changes. The main reason I think this is so is that there are so many changes made to the tax system that many people are likely to not be aware of how it really impacts them. So if you're in lockdown somewhere while you're watching this, then listen carefully as this video may help you get some money back in your pockets. The only exception to not expecting a bigger than usual tax return is if you sold some investments during the year or had other income earned during the year that has not been taxed and you're expecting a large tax bill. However, for most Australians that are employees, your sources of income have likely had tax withheld by your employer and have been paid to the ATO. If this is the case, then now is the time to see if you deserve some of those taxes refunded back to you after all those tax changes. I'm going to share the 2 ways I'm planning on reducing how much tax I need to pay in 2021. Here we go. Number 1. Big personal tax rates were brought forward by the federal government as announced in the COVID delayed budget in October 2020, benefiting millions of middle to low income taxpayers in this tax year. Most of these tax benefits would have been received by taxpayers by an increase in their take-home pay, as there was less tax required to be withheld by their employer. However, because the budget announcement came so late in the year and was made effective going back to July 2020, there were at least 3 months of salary that potentially most taxpayers would have had tax withheld from their salaries at the old, higher tax rate. As these changes were made so late in the year, for many employees, it was simply too late in the year to backdate salaries that were already paid, and many of them would have simply withheld at the old tax rate for 2 to 3 months of the tax year, and then switched to the new lower tax rates for the rest of the year. If your employer wasn't able to pass on this tax benefit to you by a higher take-home pay during the year, then you would have been owed a refund when you lodge your 2021 tax return, and that time is right now. So you don't need to do anything special in your tax return if you are owed a tax return refund, as the tax calculation at the end will determine if your employer withheld more tax than required under the old rules. You'll be given a refund up to 14 days after you lodge your tax return. But how much could you be owed by simply lodging a tax return? Well, it depends on how much you earned during the year, and here is a snapshot of how much this might be worth to you. So as you can see from the table, if you earned less than $37,000, you could be owed a refund of $127.50 for 3 months worth of income, which is not bad. At the other end of the spectrum, if you earned between $90,000 to $126,000, you could be owed a refund of up to $686.25. If you earned anywhere in between, you could be owed anywhere between $127.50 and $686.25. So maybe this year it might be good to lodge your tax return a little earlier than usual, just in case you've paid too much tax than you needed to. This is a good chore to get out of the way with if you're in lockdown. Number 2. If you've been working from home for much of the year during lockdowns or changes to your employees' work arrangements, then you could also be eligible for a big tax return this year compared to the previous year. Given 50% of the Australian workforce identifies as white collar and works in an office, this is likely to mean most Australians can claim this type of deduction for the first time this year. As working from home means you would have spent more on living costs to perform your work-related duties, the tax system allows you to claim some of this cost as a tax deduction, so long as you can substantiate a valid claim. This type of tax deduction can be claimed in your tax return at item D5, Other Work-Related Expenses, if you are lodging online in the MyGov website. How much can you claim in your tax return for the cost of running a home office? Well, there are 3 methods that you can choose from, and one was especially introduced since the first lockdown in 2020. The method that was introduced last year for people who worked from home was a shortcut method designed to keep things simple without having to maintain records. This method allows you to claim 80 cents for each hour you worked from home. The shortcut method covers all your working from home expenses, such as phone expenses, internet expenses, the decline in value of equipment and furniture, electricity and gas for heating, cooling and lighting. If you are eligible and choose to use this method of claiming a tax deduction, you can't claim any other expense for working from home. Also, this method is temporary and can only be used to work out your work from home deduction from between 1 March to 30 June 2020 for the 2019 and 20 tax return, as well as the 2020-21 income tax years, which is the one that is due right now. You also can't use it if you had a work from home arrangement before the pandemic started, and you would have to use one of the other methods to claim a tax deduction. So for example, if I look at my records that I've kept for the year, which includes a diary, I might have worked out that from 1 July 2020 to 30 June 2021, I could have worked from home for 24 hours per week on average, except for the 3 weeks I might have had off over Christmas. I would then calculate the hours I spent working from home as follows: 52 weeks minus 3 weeks of leave times 24 hours per week equals 1,176 hours. If I use the shortcut method solely for the year, my tax deduction that I could claim at D5 would be 1,176 hours times 80 cents equals $940. Now, if this was the only tax deduction I claimed in the year, and I was not entitled to a tax refund otherwise, the value of the tax refund would be applied as your top marginal tax rate. I've calculated the tax refund owing for each marginal tax rate on the screen right now. As you can see, at the top marginal tax rate, this deduction could result in a refund of $442, while at the lowest rate it could result in a refund of $178. Not a bad return for a little work in lodging your tax return this year. The downside of this shortcut method is you can't claim any costs you incurred outside of these running costs, such as if you had bought furniture or equipment for work purposes, which can result in a much larger deduction than demonstrated above if you've kept records. This is where the other two methods may be better for you, which is called the fixed rate method or the actual method. These methods may allow you to claim more if you spent more in running costs than I've mentioned earlier in the shortcut method. However, these methods can be more complicated to calculate and may require you to substantiate at least part of your tax deduction with receipts, a logbook, a diary, or it may even require you to claim part of the expense over a number of years as the item depreciates in value. Seeking help from an accountant for these types of deductions is recommended if you are not sure. If you want to find out more about these methods, you can also read up on it at the ATO's website, and I've provided a link in the description of this video below to help you. If you're interested in finding new ways to save money and ideas to grow your investments, then check out one of my other videos on the screen right now. Also, remember to subscribe to my channel to see more videos like this as I release them. It's free, and please also press the like button if you haven't already, as it helps share the message to others like you on YouTube.